Good morning, all. Welcome to the Node, your place for both DeFi, crypto, well, I guess not both, but traditional and DeFi news, interviews, and sorry, got caught a little off guard here. How's it going, David?
I'm doing well, Mike. I'm doing well. I saw the infographic, or I guess the thumbnail for today's show about USR, man, that deep egg. Oof,
Yeah,
yeah, that
yeah,
was a big
that's
one.
a little bit brutal, a little bit brutal. So, yeah, we'll get into that. Let me just do a quick introduction for our socials. Pop you up here as well. So if you want to join the conversation and ask questions, chat with other audience members, go ahead and come on over here to YouTube at the Node_channel. If you want to find us on X, which is where we seem to get the most views, is over on X. But you can find us at the Node channel, no underscore. And then last but not least, you can find our official website, thenode.pro. This is where you can watch us live. You can click on the links of the different news stories that we talk about here. We aren't able to go in depth on every one of the headlines. So, we kind of hit the high points, but if there's something that you want to go deeper on, this is where I source all of the information that for the headlines that we cover here. So if you want to come over here to research links, that's where you find all that. DeFi University is the education system that David put together for the channel. That is no charge to any of you out there. If you want to learn about fiat money, the banking system, DeFi Don right after this goes into the basics of kind of why it is that we're so bullish on crypto and blockchain technology.
Dirty fiat. That dirty fiat.
Dirty, nasty fiat. It's been run through. Fiat's been run through.
Oh man, a train, dude.
So if you want to learn about how the traditional banking system works and how fiat works and all that, and why it is that we're investing in crypto, blockchain technology, and DeFi, and taking that power back to where we can earn on our money instead of the banks and the system earning on our money. This is where you do it. If you want to accelerate your education and you want to do one-on-one coaching with David, he has fully debanked. He his all of his earning, all of his savings, all of his investing is done separate from the traditional banking system. So he is 100% debanked. But if you want to learn how he makes his living in DeFi, then this is where you schedule that. Our AI newsletter is about to go live. We're thinking it will probably be next week is when that's going to go live. David's just doing some finishing touches when it comes to the payment processing and things like that. It will be $20 a month, but the cool thing about this newsletter is that you choose what assets that you want the newsletter to generate. So both stocks, commodities, and crypto. You can pick the tickers, and it will generate the newsletter around the assets you are interested in. Not that I'm interested in, not that David's interested in, what you are interested in. So it will give you the news. It will give you the what's trending socially, like on X and things like that. Talking about your assets, it will give you trading ranges. It will give you liquidity pool ranges. So the lines of support and resistance of where you want to set your ranged liquidity pools. So all of this. Sorry, I got a text. My truck's almost
Mike,
fixed. So.
are you talking about my assets again? Don't be talking about my assets.
You have a nice set of assets. I must say, but it's important that that you get the news that you want. So we have revamped. That's why we me and Don and David have been working on this and getting this dialed in and making sure that it's right. Is we want to give you what's of value to you, and that's what this is. So anyway, that all
So,
out
so
of the
Mike,
way.
I don't think that anyone has built anything like that. A custom newsletter that you can
No,
customize for yourself. I don't think so.
I don't think so either. And
Yeah, I don't
I
think
oh, sorry, go ahead.
I don't think it exists, man. I think that this is the first one of its kind. That's pretty cool.
No, it really is. It really is, and it's been a really cool project to work on. So yeah, it's Dom did a great job on the back end to get all the data to where it populates properly and all that, and then you getting it integrated into the website. Yeah, once we get that payment gateway and all that stuff set up, this thing's good to hook. So all
Yeah.
right, so let's jump straight into the news because we got quite a bit going on. So on the macro, it looks like the macro environment is dominated by extreme volatility and safe haven assets as geopolitical tensions show signs of sudden, albeit cautious, cooling. The de escalation bounce. After a weekend of high alert 48-hour ultimatums, Bitcoin and equities rebounded today. President Trump cited very good and productive conversations with Iranian officials, delaying potential strikes on energy infrastructure and causing a relief rally in risk assets. So, what are you seeing that is, that supports this, David, as far as charts and what you're tracking?
I mean, I guess I didn't realize that Trump could end this war, overnight with one comment from the Oval Office. I didn't realize that, like, that was a thing. So when I'm taking a look at markets here, Mike, there's a couple of markets that are interesting to me. Gold, gold was down at $4,100 earlier
Mhm.
today. Silver was down at $61 earlier today. They've both bounced in a big way from those lows. But the reason why that's so interesting to me is, during a global, or, a regional in the Middle East, a regional crisis there, people are selling gold and silver and reaching for dollars. I find that to be so interesting. The dollar is putting in basically a nice bullish flag pattern right now.
Mhm.
So, maybe there's a little bit
We
more
can pull that up
upside.
if you want.
Oh yeah, yeah. Here I can share this real quick. Let me hop into some charts here. Let's just take a look. Let's take a look around the horn at what's going on the board. It used to be called the big board because back in the day, in Chicago, when guys were in these pits and they were trading in pits, where you always see like sell, 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 buy, buy, buy. Those
Yeah, yeah.
guys with the hand signals and all that shit. Um, so the pit
Like on
traders.
Trading Places with Eddie Murphy.
Yeah, yeah, exactly. So the pit traders, they used to look up at a big board. And so whenever you say like, oh, it's the best on the board, that's what you're talking about because there used to literally be a big board with all the quotes. So if I'm taking a look here at the dollar, now this pattern where we've got, you could call this a little bit of a flag here, but it's got a level of resistance up above. You see this? So this level once, twice, three times, four times tested. The more times a level of support or resistance gets tested, the more likely it becomes that it breaks. So
Mm,
when I see the dollar, getting rejected at 150, it makes me think, okay, well, will there be another test? Because if there is, then we might actually get a breakout on the fifth test. And so, what's the biggest driver of the dollar? We've got to think about why the dollar is so important right now with everything going on in the Middle East and with crude oil. They call it the petrodollar for a reason. So, we've got to track yields here. If yields continue to push up, I would expect the dollar to continue to push up. And, as much as I love what Trump is doing, it's just like one man cannot control an entire market, even as powerful as he is. So, 4.365% on the 10-year, it was higher earlier this morning. But if this continues to push, look, I mean, there is no resistance up here until we get up to 4.59%. That is resistance. Where the yields have paused, that is not resistance. So I'm just thinking to myself that there's probably a little bit more room to go on the upside out of yields. And that's important if we're taking a look at the dollar, because if yields push higher, I would expect the dollar to also push higher. And then if we take a look at crude oil, like this is super important, man, with what's going on in the Middle East right now. This is a big bearish engulfing candle. The body of today's candle so far, we've got 3 hours and 50 minutes until the end of the regular session today. I think crude might close a little bit earlier than that, but if we're just taking a look at the body of this candle, it engulfs not just yesterday's or Friday's price action, but also the day before, the day before, the day before, not quite Monday the 16th. So this engulfs basically a week's worth of price action right now. That is pretty darn bearish. But I don't know that, look, unless the Iranians come out, whoever's left over there, I don't know who's calling the shots, whatever. But if they surrender, well, then maybe oil collapses. But if they don't surrender and they actually start lobbing whatever missiles they still have left or harassing shipping, then this is going to go straight back up.
Yeah.
It's just kind of strange how the markets really wanted to rally. The markets really wanted a relief rally. And the comments from President Trump earlier today gave the markets that excuse to rally. And so that's what we needed. We needed oil down so that equities like the NASDAQ could bounce. But look at what happened to the NASDAQ, though, and the S&P. If we just start with the S&P. So the 200-day moving average, there's a saying, in markets, nothing good ever happens below the 200-day. So we got to make sure that this does not get broken. But look at what happened. It broke and we closed below on Friday. The breakdown and the close below. Now I'm watching the futures contract here, but if we take a look at the cash contract, this looks not as good as the futures. Now the futures lead the cash. The futures move first. The cash index follows. But this close below the 200-day moving average here, this white line, the close below on Friday, and then today just bouncing back up to that 200-day moving average and getting rejected. See that? So far, there's plenty of time left in the session today, but the bounce back up to the 200-day and the rejection from the 200-day. We can see that a little bit more clearly if we zoom in, but this is really important because we got a little bit of a relief bounce, but no continuation, not yet. What we need to see is a real push above that 200-day and a close back above that 200-day moving average. That is really important. And volatility, so volatility here, this is the VIX. This is just the VIX, the calculation. And what this is going to tell us, Mike, is basically it measures at the money options premiums for the SPX, the cash index. That's what it's measuring. But that becomes a proxy for fear. And the reason why it becomes a proxy for fear is because when traders or investors become more fearful, they reach for protection. And the way that they do that is by buying puts. Typically, you'll see people
flight to safety.
A flight to safety bid would be more like buying bonds or buying gold. That would be, or buying dollars. If you hold gold and you really want to be liquid in cash, you sell that gold, you buy cash. But here, the way that you would see, this play out is as traders reach for protection, not necessarily a flight to safety, just trying to protect their long portfolios. So you would see bids in puts. Puts would get bid, and that would push up the VIX because premiums start to expand. So this is VIX. This is, the people call it the fear gauge. And notice where it found support. It found support at an important level. So this 20, that level, 20 is an important level in the VIX because below 20, and you can say that markets are complacent, not much fear. Above 20, and you could say that, some volatility, some fear is starting to creep back into markets. You start to get above 25 or 30, that's like real elevated volatility.
What's the date on that huge spike back there?
So this is the April tariff tantrum last April.
Oh, okay. Yeah, I was just curious because if this measures, that that fear or that anxiousness, I was kind of curious what caused that.
Yeah, so this was the tariff tantrum. And this was, I think, that first Japanese yen carry trade unwind.
Hmm.
And so notice I got 20. You see in orange, this
Yeah,
orange
yeah.
horizontal line, that is like the 20 level. Below it and markets are calm, above it and markets are starting to become more volatile. How much time would you say over the last, oh, I don't know, since the end of 2023, do you think that markets have spent more time below 20 or less time below 20? I think that markets have spent much, much more time below 20.
Oh,
And
absolutely.
we've only had like brief periods of volatility. But look at what's happened so far year to date. You see this volatility expansion where
Hmm.
volatility is mean reverting, meaning it should revert back down to a level, at or below 20. Right now, the moving
Well, that's
average,
kind of a pattern that I don't see anywhere, back, in along that, timeline. Basically looking at those candles, I'm kind of looking at it as a timeline, and just that buildup, that steady growth.
this, yeah,
Everything else is just kind of like it spikes up and it spikes back down.
right,
This one is
yep.
just like building, 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 building.
Yep, and it's not good. It's not good for markets
No.
because when volatility expands like this, usually you get some type of a correction. So that's why I've been a little bit more of a bear over the last couple of weeks because I think that it's time for a correction, just like last year around this
Mm.
same time of year. So that's kind of what I'm thinking is that the
And
VIX.
do you feel that correction is going to be across all markets or just risk on assets, or what's your thoughts there?
I think everything. Yeah. Um, I think everything sells off a little bit. I think bonds probably continue to push a little bit lower if we're just taking a look at, bonds here, because this would be like higher interest rates reflecting higher inflation expectations. So if bonds push just even a little bit lower, that would mean that rates push higher. So here's the rate for that 30-year bond. This I think could push a little bit higher. So that means okay, well maybe I'm a little bit bearish on treasuries. All right, well what about stocks? Here's the S&P and I think that the S&P probably continues to break down below its 200-day moving average. So maybe I'm a little bit more bearish on stocks. We take a look at something like gold and silver, right? Here's gold. Gold found support at $4,100, but now that it's completely rolled over, I remember trading in 2010 and 2011 right as I was starting to learn about markets back then during that first big parabola that gold and silver put in. That was when I made my first money in markets, was back in 2010, 2011. And I thought, oh my goodness, this is great. Anyone can do this. Well, it turned out to be a little bit more difficult than that. But when I see this type of a pattern, it makes me think that we might retest this 200-day moving average. So I'm a little bit more bearish on gold and on silver. Silver, I think, has some support down a little bit further, around like 55 or 50 down here. So okay, if I'm bearish on bonds, bearish on
Mm.
stocks, bearish
Mm.
on gold and silver, what am I bullish on? I'm bullish on cash. I think cash is going to push, and the DXY is going to break out above 150. That's 100.50 right here, this level of resistance. So I think interest rates go a little bit higher. I think that cash DXY moves a little bit higher. And I think that oil, I'm not convinced that, this conflict can just be resolved with one press conference,
Mm.
from the Oval Office saying that, hey, don't worry, everything's good now. We're talking to
We've had
them.
some productive discussions. It's like,
Yeah, I don't think that's enough, man.
yeah.
So I kind of expect oil to push a little bit higher here. I don't think that there's been enough pain yet. So yeah, those are just my thoughts on markets here. But as far as digital assets go, Bitcoin is in this interesting little channel. So maybe Bitcoin could make it up to the top of this channel. That's
Hmm.
definitely a possibility. That's up there at 76. That could definitely happen. But on the downside, we're looking at, support down here, maybe around 49, 49 or
Well,
50.
and Don, Don was saying this in the chat, because Zip was saying that your breakdowns are the best, and so Don was saying yes. Ask him about the cycles on Bitcoin and the days. He says Bitcoin
Oh,
low
dude.
October 2026. That's quite a specific date.
Okay, yeah. So that was a really really good post. Let me just find that image in my phone, and I'm going to send this to myself real quick so that I can get it up on the screen because, dude, there's that guy on 4chan. Did you see that guy? He posted about the Bitcoin all time high to all time low, and basically the cycles. He
Yeah.
he identified all of the there we go. I got it. So he identified all of the Bitcoin cycles. And this is literally all you need to know. This is all you need to know moving forward, like throughout the next 3 years. Like you literally don't need to know anything else about crypto. And you could probably do really, really well just with this. So here I've got that document downloaded. And let me just open this thing up real quick so we can take a look at this because I think that this will be really, really interesting. Okay, so here we go. Let me see if I can share a different, let me share something different here, Mike. I want to share just this image. Let's bring this up on screen. So from window, Bitcoin cycles, there we go. Okay, so you see this? There we go. This is, I think, literally all you need to know over the next, let me just make sure that that looks better. There we go. Cool. So I think this is all you need to know. And look, this guy was able to predict the top. And so now we should be able to predict when will the bottom come in? When will the bear market low come in? That's all we need to know. So all-time low 2015 to all-time high 2017, 1,064 days. And I'm going to go ahead and mark this on the chart in a second. I just want to talk through it. All-time high 2017 to all-time low 2018, 364 days.
Mhm.
All-time low 2018 to all-time high 2021, 1,064 days. See that?
Mhm.
It's just identical pattern. All-time high 2021 to all-time low 2022, 364 days. Again, the pattern repeated. And then he used this pattern to predict the cycle top on the 6th of October, 2025. He didn't predict the price, he predicted the time.
Mhm.
So, what this means is we should have our low in by October 5th, 2026. So, that's when we should get the low. What does that then mean for the next high? Well, we should have our,
1,064 days.
yeah. So, 1,064 days from October 5th, 2026. So what is that? Can someone do that math real quick? Let me see if I can do that real quick over here on Gemini. Um, what is 1,064 days from October 5th, 2026? Let's see if I can figure that out. Sometimes these AIs have a problem doing stuff like
You
this.
you can use a
Um,
Julian calendar.
Check this out, September 3rd, 2029. So it's 2026, and we're talking about, all right, well, we've got more bear market, a lot more bear market left.
Yeah.
It's March 23rd, man. So if it's March 23rd, and we shouldn't expect a real low for this bear market until October 5th of this year, based on the cycle. Well, then that means that we shouldn't expect a fresh all-time high. Now, I'm not talking about the start of a bull. I'm talking about the all-time high, the next all-time high. It says
Mhm.
that we shouldn't expect that until September 3rd, 2029. So, Mike, I'm going out there on record right now, bro. I'm calling the top. The next top is going to be September 3rd, 2029.
All
And
right.
our bear market low is going to be put in by October 5th of this year,
Okay.
2026. So this is recorded for eternity. So we'll see if I'm right. But
All
this is
right.
super
Yeah.
cool.
We'll have to figure out a way. Maybe you know what? Maybe we'll add like some kind of timer or something on our the Node.pro website or something like that. Count down to David's estimated.
Dude, that's a great idea, man. I'm
You know
gonna
what I mean?
I gotta
Well,
definitely do
because
that.
then there's there it's we're putting it out there. We're just like, you know what? This is we're calling it, and if we're wrong, we're wrong. If we're right, we're right.
I mean, look, the cycle repeats. Now, I would love to be able to explain why. Why does this cycle repeat? Uh, but
Because we
it
living
could.
in the matrix.
Yeah, man. That's all. It probably is what it is. It's like
Well,
this shared like delusion or something.
yeah.
I don't know, man.
You know what? And it maybe, I mean, who knows? It's like whoever or whomever is behind Bitcoin. Maybe they just they understood the system at a deep enough level that they understood that that 4 year cycle. They understood it because I mean, almost everything you look at is like a sine wave. It's an ebb and a flow. Everything's a cycle in nature and finance and life. I mean, everything. I mean, ancient cultures, everything's a sacred hoop or a circle or a cycle. The seasons, all of it. And maybe that there's just patterns. It's pattern recognition. We show it in charts. When people do technical analysis, it's simply looking for patterns. So maybe somebody in their infinite wisdom just saw a financial pattern, created Bitcoin around it, and it is what it is.
Yeah, man. I mean, I don't know how to explain it, but it doesn't matter. All that matters is that
No,
it is. You know what I mean? Like, it doesn't even matter that I can't explain the thing. All that matters is that it's real. And
yeah,
so, hey, that means we're in a Bitcoin bear market. And so that means I want to lean a little bit short. That's all that means. And so that's what I'm
it's
doing,
you
man.
know what, and sometimes it's easier just to keep things simple, stupid. Don't
Exactly.
overcomplicate shit.
Have you seen that? What's that meme where it's like, there's on the left hand side of the meme, it's a bell curve, and you got like
Yeah,
the retard on the left hand side, and you got the Jedi on the right hand side, and in the
yeah,
middle, you've got everyone.
yeah.
Um, yeah, man. Sometimes you got to be the retard a little bit, but never go full retard, though. That's the thing.
No,
So,
never
just
go full
never.
reach.
But I mean, you get the same result as the
Forrest
Jedi.
Gump. Forrest Gump. Simple,
Yeah.
yes. Retard, no.
No.
Built a multi-million-dollar shrimp company, played ping pong, won championship. It's a little slow, yes. Full retard, no.
You're a goddamn genius, Gump.
That was on Tropic Thunder with what's his name that freaking did the blackface that everybody got upset about.
Dude, that was great. That was a great movie.
Hilarious movie.
Yeah.
But
Yeah.
he was talking to him about that Simple Jack or whatever movie. He's like, you went full retard. You can't come back from that.
Yeah.
But
And you know what? Sometimes though, if you overthink it, then you're gonna miss the forest for the trees type thing.
yeah,
And that's what this is, I think. All you gotta do is not overthink it and
that's it.
say,
Robert
"Hey,
Downey Jr.
yeah, Robert Downey Jr. That's right. That's right." So yeah, man, I think I don't want to overthink this. And that means that all I'm going to do is here, let me go ahead and mark this off just like real quick. Let's just see what this looks like on a chart. So here's the chart of BTC. Let me just zoom out here. BTC USD. Let's just take a look at the US dollar contract here. And you know what? I'm going to go ahead and delete all of this stuff and we're going to just start with a clean chart. Okay, so if the cycle analysis holds, then I'm going to grab a vertical line here, and I just want to go ahead and mark on this chart October 5th of 2026, because that, according to the cycle, is when we should have a low in buy. So that's a Monday, October 5th. So I just marked Tuesday because it wouldn't let me do it. So this, I'm going to go ahead and let's write on this thing. I want to write on this. And I want to say in the settings right there, the text is going to be October 5th, 2026 low. So that's when the low gets in, October 5th, 2026. Now, when should the next all time high come in? The next one, oh, it looks like it doesn't allow me to go past 2027, but the next high should be 1,064 days from then. So if we measure from here and we go 1,064, that's going to be right there, just about right there. So this is what we're looking at. Let me zoom out to a weekly. And so from the weekly, wow, that looks a lot more interesting there. I can just go ahead and throw down this trend line. You see that? Look at that. Beautiful. Perfect. And I'm just going to extend this to the right. And so wherever that bear market trough ends up coming in, I'm thinking that it's probably going to be like, maybe if I grab an arrow tool, I think it's going to be like a little bit below the 200-week moving average, because that usually happens. So probably it repeats again, same pattern. So maybe we get a low around 50K, maybe a little bit below that, who knows, but I'll definitely be buying there. So that might be the low by October 5th. And then the next all-time high is likely going to be up here at trendline resistance, maybe somewhere up there, 180, something like that, maybe a little bit higher than that, So maybe up there, that's your sell zone, right? So down here, if we just go ahead and mark this is your buy zone. And let me just change this to green. You see that? So this is your buy zone. This is your sell zone. You want to make, 4 or 5x on Bitcoin? Well, wait until it gets down here to 50 or below, buy it.
Mhm.
And then you know what you do next? Nothing. You sit and you do nothing.
It's like step one, buy low. Step two, step three, profit.
Exactly. Step two is do nothing. And do
Mhm.
nothing for basically, like, what is that? 1,064 days is how many years is that?
Well, it'd be around
1,000.
three. Be around 3 years.
Yeah, so that's like 2.9 years. Cool,
Yeah.
man. So you literally just, it's a slow game to make you a lot of money, to just sit there.
For every 1 year of bear market, it's basically three years of building into a bear or a bull. I mean,
Yeah, so I mean that's the plan, just sit and wait, and then buy, and then do nothing, and then, yep, no
I
more
mean,
in
I'm,
there.
I'm trying to build as much dry powder as I can right now. So yeah,
Me too, man.
I'm not taking anything out of crypto though, because yeah, I missed that boat. I didn't sell enough. Where the top was. I was thinking that we had more room to the upside. Because yeah, really, I mean, we've gone over that. Really, the only thing that moved in a significant way was Bitcoin and those freaking crazy ISO tokens. But I mean, luckily, I made a little bit of money on that though. So
Well,
those
yeah,
ISO tokens.
but think about what could happen to the alts if Bitcoin does this, right? So
Oh
if
yeah, it's going to be a bloodbath.
oh yeah, but I mean, dude, the opportunities are going to be amazing though, because like
Yeah,
if Bitcoin gets down here to 50K or below,
yeah.
then I think
There'll
just
be
about
some awesome buying opportunities.
oh dude, yeah, every altcoin might get back down to like its bear market lows from last bear market, which
Yeah,
means, you might be able to pick up Solana like at or below $30. You
yeah.
might be able to pick up Ethereum like, around $1,000, maybe a little bit higher than that. You take a
Hmm.
look down the list, right? Here's Sui. This one hasn't even been through a full cycle yet. You might be able to get it for like 35 or 36 cents.
Hmm.
You take a look at something like Aave. Aave, you might be able to pick up for like $50. You take a look at BNB, maybe like $200 on BNB. You take a look at, maybe if you want to buy some Arrow, sure. You could buy some Arrow down here for 7 cents if you get a chance to do it. Maybe some Tau. Tau, I like Tau. I like me some Tau, so tallow.
Yeah.
I like beef tallow more than
It,
actual Tau. But
Yes.
yeah, so maybe like $50, $60 for some beef towel. Hype. I mean, hype is kind of a wild card because this one is tied to the success or failure of that perpstex. So, could this one correct a little bit? Sure. But this has been one of the best performers out there. You take a look at hype in Bitcoin terms, and, it kind of reminds me, Mike, of Canton. So, hype in Bitcoin terms, broke out to some fresh all time highs last week. But then if we take a look at Canton, Canton has actually performed quite well after its initial launch. And then if we take a look at Canton in Bitcoin terms, this is what outperformance looks like. This
Hmm.
is basically nothing but straight up in Bitcoin terms. So it's hype, Canton, and then I think probably Tron. Tron, this one has outperformed just about everything else. I mean, this is just a phenomenal performer. And if you measure it in Bitcoin terms, so Tron BTC like this, then it is about to or getting very, very close. So basically, this bear market, since the start of this bear, Tron has really outperformed Bitcoin.
Hmm.
So this is major outperformance. So those three, Tau or Hype, Tron, and Canton, those three have outperformed Bitcoin. And I can't think of another coin, another alt that's actually outperformed BTC aside from those three. Even if we take a look at Tau, Tau, yeah, it's outperformed over the last 3 weeks, but that's it. Other than the last 3 weeks, it's nothing but down against
Hmm.
Bitcoin. So if you're going to buy an alt now, it's got to be outperforming Bitcoin, I think.
Absolutely. Well, and hype just keeps getting good news, and we'll get into some of that here in a second. But first, I want to do a little bit of a progress report on the Clarity Act. So, the logjam that has stalled the Clarity for Payment Stablecoins Act, or the Clarity Act, and broader market structure bill has finally broken. Here's the status of that today. The Tillis also Brooks Compromise, the yield standoff. The primary hurdle was a dispute between banks and crypto firms regarding stablecoin yields. On March 20th, Senators Tom Tillis, Republican from North Carolina, and Angela Also Brooks, Democrat from Maryland, reached an agreement in principle backed by the White House. The rule, passive yield, earning interest just for holding a stablecoin, is officially banned to prevent deposit flight. So this is what we've been talking about, where the banks, they don't want us earning yield on our stable coins or our cash because they want to have a monopoly on that. The carve out, actively based rewards, yield earned through payments, transfers, or specific platform utility remain permitted. This allows platforms like Coinbase to continue rewarding active users while satisfying bank lobbyists. So, David, do you want to kind of decrypt that for us? What exactly do they mean by yield earned through payments, transfers, or specific platform utility?
That's a bunch of bullshit, Mike. That's
Yeah,
that's
no,
what they
it
mean
really
by
is.
that.
It
It's
really
like, dude, it's a bunch of like lawyers got together in a room somewhere, you
yeah.
know, and they decided to like put together some legalese, and that's basically what I think of that. But reading about it, so that yield standoff compromise. So they're saying that the core dispute was Section 404. That's what it says here. Section 404 in the Clarity Act, which I guess the banks were arguing was going to cause a deposit flight. You
Basically
mean
cause everybody to pull their money out of the banks
right
so because
to
they
get
can
up?
earn more money putting it in DeFi, and then they'd be held, basically caught holding their dick, and they would,
Exactly.
and their entire business model would fall apart.
That's exactly right, man. That's what it looks like to
The
me.
house of cards.
Yeah, because they don't have our money. Like if you've got a traditional bank account, when you deposit money into that account, and DeFi Don has done a great job going through all this in the high school, which is going to be on immediately after our show.
Yeah.
But dude, you can learn so much just by going through that high school content about what money is, how these banking cartels and institutions work, and why they are like a cancer. But Section 404 in this Clarity Act, they were fighting about this because they thought the banks think that by allowing consumers, allowing sovereign individuals to earn yield on their money, that the deposits that these banks own would leave. Customers would take their money and go somewhere else because, hey, these banks, their products suck, especially when you compare them to DeFi products. So, like, it's a
Dude, I
no-brainer.
actually saw somebody had the nuts to post. I should have saved it. They basically posted that DeFi is dead because they can earn 3 point something percent in some TradFi vehicle, and I had to post. I was like, well, then you obviously know nothing about DeFi if you think 3.75 beats DeFi. It's like you're doing it wrong.
Yeah, man. I mean, you can get 3.7% taking the least amount of risk possible in DeFi. But you
Dude, you can make
should,
more holding USDC on Coinbase. You can earn
right.
almost 5% just putting it on Coinbase and doing nothing else.
Yeah. So, I mean, a centralized exchange will offer yield right now around 5 or 6%.
Yeah,
I earn 6% just on my checking account, like in
yeah,
DeFi,
yeah, over
you
an
know,
EtherFi.
Yeah, so that's a great product that they put together there. But if you want to earn 10 or 15%, you can do that, in a heartbeat. It's really, really simple to do. If you want to do
You take
25,
on added risk, of course, but I mean, somebody, basically having the nuts to post something like that to me was just like, really? Like you obviously know nothing about, DeFi or crypto if you had the nuts to post that.
yeah. So, the funny thing that I'm reading here about, this, I guess, little compromise today around the Clarity Act
Yeah.
is these institutional safeguards to prevent yield loopholes. Which,
You
dude,
you mean what those pesky things where we benefit and not them?
right. That's exactly right, dude. That's exactly what it's talking about. A
Yeah.
yield loophole is simply a way for a consumer to earn money on his or her money. That's all that is. So they're saying we got to prevent that. We can't
That's
have
that's unacceptable. We
we
can't have
can't have
people earning on their own freaking money.
these
We cannot
these
have that.
these fucking peasants. We can't have
How
them
dare
earning
they?
money.
How
I
dare
know.
they?
I know.
the the nerve.
The nerve.
Well, so the legislative timeline, the Senate banking markup. Senator Cynthia Loomis confirmed that the Senate Banking Committee is now scheduled to mark up the bill in late April, immediately following the Easter recess. The May deadline, Senator Bernie Moreno warned today that the bill must reach the Senate floor by May to avoid being swallowed by the 2026 midterm election cycle. Me and David have been talking about this. I believe it was Crispy or somebody in the chat brought this up, and I can't believe that we didn't bring it up before. I mean, it's like right in your face. But the politicians, for the most part, that are holding up this bill and that are pushing for the basically for the banks is the Democrats, and they're hoping that in the midterms that they flip some seats because they want to retake the House or retake the Senate, and this is very very important because if they can do that, they can turn Trump into a lame what they call a lame duck, which is basically where he's not going to be able to get anything through the House, the Senate, Congress. The two House or the two together are referred to as Congress. Nothing is going to make it through Congress for him to sign, for the most part. And that's what they call a lame duck president. Is it's his last, his last, bid in office, his last 4 years, and one of the opposing party, is able to basically just log jam, all the different legislation. So
Mike, was it always that way? I don't remember, the two sides of the aisle being at each other's throat the way that they are now. Now, I have my particular set of beliefs. I've got my believies or whatever. But I mean, dude, look, like for the bill to clear the Senate it needs a 60 vote majority. And with the Senate split, that means that Republicans need 7 to 10 Democrat votes to overcome a certain filibuster. And
Yes.
with the way things stand now, I don't see how any Democrats are going to vote with Republicans for anything, let alone,
They, they've always opposed each other, but like there's always been a logical reason that now it's Democrats like vote the party line, Republicans vote the party line, and it has nothing to do with principles. It has nothing to do with trying to do what's best for their constituents, the people that vote for them. It has everything to do with what the party tells them to do. It's it could be like this bill is to approve this medicine that will cure all cancer, and if one party is against it, then all of them are against it, and if one party's for it, they're all for it. It's just it's that black and white, and I've never seen it like this in my lifetime. And I'm over 50 years old.
damn, old as fuck, man.
Yeah, right?
I'm just
Right?
kidding, dude.
Oh no, dude, I am. All
No,
right.
man. But so the Genius Act got the support of 17 Senate Democrats. So if those same 17 stay on board for the Clarity Act, the bill passes. The problem is that we're going into, what you were talking about, Mike, like a blackout period. They call it
Yeah.
like the midterm blackout. So
Yeah.
that is, you know,
Nobody
I
wants to
just
rock the boat because if they take a stance on something and it ends up being unpopular, then they potentially could, lose re-election or something like that. So everybody goes into freaking batten down the hatches mode.
so there are three things, Mike, here. There's DeFi. These are the three obstacles to bipartisanship, and you're going to love the people that are leading the other side here. So there's obstacle number one is DeFi provisions. So Elizabeth Warren wants strict anti money laundering rules for non-custodial wallets. So that's what she wants. She wants the IRS to be snooping around on your DeFi wallets. And then the other issue is the CBDC ban. So House Republicans want a permanent ban on CBDCs, but Democrats seemingly don't. So that's being negotiated. And then you got the Trump clause. So some Senate Democrats are demanding ethics language that would bar the president or his family from personally profiting from crypto ventures. So that's been
You
rejected
know
by the
what? I'm
White House,
all
of
for
course.
that if they vote where none of them can buy stocks or anything like that, based off the information that they get in closed door sessions of
Right,
finance committees and shit like that.
right, yeah, yeah.
You know
But
what? What's good for the goose is good for the gander.
yeah, we'll see. We'll see about that.
Yeah, no, it won't happen. But that's the hypocrisy. I
Yeah,
believe that's the proper word is the hypocrisy of our government. All
it's a
right.
shame.
So outstanding nibbles. While the yield issue is 99% resolved, three smaller issues are still being negotiated. DeFi guardrails. Lawmakers are refining language to protect DeFi developers from liability when their protocols are used for illicit finance. The ethics clause. A heated debate remains over whether to prohibit senior government officials and their families, like you were saying, from profiting from crypto ventures. A direct jab at recent presidential meme coin controversies. I agree with that. I don't think that politicians and people in power should be able to basically benefit from insider information and use their position to profit. A community bank add-on. Republicans are pushing to attach community bank deregulation to the bill in exchange for Democratic support on the final floor vote. Let's see what else we got. So that's kind of the update on the Clarity Act. I think it's important to keep our finger on the pulse of that because it really is going to shape the future of crypto. Legislation is the core or the foundation, and especially in the US, because most countries just basically copy and paste whatever it is that the US does because it's the dominant market. and it's much easier for them to just be like, okay, these guys hashed it out, we're just going to do the same thing, and they want to be in compliance with with U.S. regulations so that they can participate in those activities. So if you want to be a part of the largest economy on the planet, you got to play by their rules. So that's why this stuff is so important. I know it's kind of boring to talk about politics sometimes for some people. I find it infinitely interesting, and I know David
I
does.
love it. I love it.
Yeah,
Yeah.
I know a lot of people like to try to keep crypto and politics separate. You can't. It's if you are not keeping your finger on the pulse, and maybe before when crypto was kind of this niche that was had nothing to do with government, and they weren't even talking about it. There was no legislation. It was just the Wild West. Yeah, you could keep those separate, but now, you know, if you're ignoring what's going on in politics and how it pertains to crypto and blockchain technology and the future of DeFi and the TradFi, that retarded fish frog I'm always talking about, the merging of the two, you're doing yourself a huge disservice. You really have to put on your big boy and big girl pants and be able to talk about politics, and left, right, middle, whatever.
Yeah, you really do. As much as sometimes we like to believe that we have two parties, sometimes they become a uni party. And yeah,
when
man.
it when it comes
So
to their bank accounts and
right.
keeping their position of power, they're bosom buddies.
Right. And it's a real shame to see. I mean, you can see it right now playing out in the Senate when you've got massive support countrywide, black, white, brown, male, female, it doesn't matter. People want this SAVE Act to pass because it seems as though people really want voter ID, right? Um,
Yeah.
and yet,
80%. Some polls are saying 80% of Americans, across party lines, obviously, with 80%, want voter ID.
yeah, and yet no movement on that.
Yeah.
So, uni party blocking it, man. It's a real shame to see the will of the people not be done by their representatives.
You got to ask yourself, if 80% of the country wants something and the representatives, in almost a single voice, are refusing to take it up as a topic or to get it done, what does that say about our government? Are they actually working for us? If 80% of the country is saying that they want voter ID laws and they're not making it happen, do they actually work for us? So,
Seems
moving
like
along.
maybe not.
Yeah, moving along. So looks like in TradFi, the Bitcoin whale strategy or MicroStrategy has shifted to a perpetual preferred stock funding model, allowing it to purchase another 22,337 Bitcoin last week. This brings their total holdings to a staggering 761,068 Bitcoin. USDC dominance. Bybit has slashed fees for USDC dominated pairs by up to 50% to challenge USDT's dominance, reflecting a broader TradFi push towards regulated stablecoin infrastructure. Those that weren't paying attention last week, USDC actually overtook USDT in some key metrics. Are you watching that, David?
You know what? I haven't been, but I probably should have. Um, so let's talk about that. What metrics has USDC overtaken USDT in?
I'm actually looking it up because I don't want to say the wrong thing. I want to make sure that I'm right.
Yeah, I'm looking it up right now too, Mike. Let me see. USDC has overtaken USDT in some specific DeFi metrics.
Mm-hmm.
So yeah, it's saying that there's been a flippening in 2026, but it's
Mm-hmm.
happening in transactional utility rather than total market cap. So it's saying that USDT remains the liquidity king with a market cap over $185 billion, but USDC has overtaken it in terms of adjusted on chain volume and some specific DeFi activity as of Q1 of this year. So it's called the volume flippening. So there's a couple of DeFi platforms showing that USDC is now moving more value than USDT. So USDC in February of this year accounted for roughly 70% of total stablecoin trading volume.
Yeah.
Wow, man.
Yeah,
Wow.
1.26 trillion compared to USDT that only handled 514 billion.
That's amazing. That's amazing. And annualized transfer value. So for the
Yeah.
full year of 2025, USDC, it says, processed $18.3 trillion in transactions. Wow, man. That surpasses USDT's 13.3 trillion. But Mike, I thought that XRP was going to be doing all the, what?
Dude, I have gotten so much hate from the XRP army for pointing this out. That cross-border payments, that whole narrative, for XRP was destroyed with stablecoins, and stablecoin legislation. I mean, even Ripple. I was even pointing out that even Ripple conceded to that because that they came out with RLUSD. They understood that the stablecoin legislation, stable coins having to be backed one to one with the U.S. dollar, U.S. dollar equivalent, and all that stuff. They saw the writing on the wall because they're in the room. Ripple and Brad Garlinghouse, they're in the room with Brian Armstrong from Coinbase and Circle, the maker of minter of USDC, and USDC is the clear front runner when it comes to kind of being the bosom buddy of the U.S. government. It's you can say what you want about USDT and USDC, but it's obvious that USDC is making all the right moves to align itself and be fully compliant. So when it comes to stable coins, I see USDC as that it's going to be the king. I could be wrong, but I mean, what are your thoughts on that, David?
Well, I mean, you can't count Tether out because they're still, when it comes to TVL, they're still the biggest. And I can tell you, they look to be actively pursuing, compliant products. So USDT right now is non-compliant with the EU's MiCA framework. Which, look, I mean, I'm all for that. Screw the EU and that MiCA framework. Like, screw that. But they're non-compliant with it, which is a problem for institutions because institutions can't hold something that isn't compliant. So, this has led to a flight to quality amongst many of the institutional DeFi players because they need a compliant stablecoin asset to avoid regulatory quote unquote contamination.
Well,
So, yeah,
that's an important thing to understand because like Binance and OKX, they've had to on their exchanges in the EU, they've had to delist USDT if they want to operate in those jurisdictions.
yeah, man. See, you see this regulatory compliance, this regulatory clarity issue, like it's so far, it seems like it could be pushing some innovation out of Europe and maybe even out of the United States into more friendly jurisdictions, places where people actually use these products, like Southeast Asia. And that's really where these products get used a lot is Asia and Southeast Asia. So we better hope that these regulations in the United States, I'm not too worried about the regulations in the EU because like they're pretty much guaranteed to overregulate no matter what. But
Yeah.
in the United States, like, the passive yield ban, because the Clarity Act and the EU's MiCA framework bans passive interest, which is paying you just for holding a stablecoin.
Hmm.
Um, they're restructuring it into these activity-based rewards. So the winner there, the clear winner, is USDC. Circle USDC product is the clear winner because it's already highly regulated and it's MiCA compliant.
Well, and
Um,
I know it's the only stable coin on Coinbase, and
right.
and a lot of and a lot of base the base ecosystem. But here's two things that I didn't know. So, treasury adoption. More than 170 publicly traded companies now use USDC for treasury management. It's one-to-one backing by US treasuries, which is audited monthly, makes it a cash equivalent in the eyes of CFOs. Credit lines. Major banks like JP Morgan are increasingly accepting USDC as collateral for institutional credit lines, a level of TradFi integration that USDT has yet to achieve due to its diversified and more opaque reserve mix.
Yep. Yep. So, that's really important, man. They're starting to talk about USDC as the corporate financial rail. Um, if companies start to treat USDC like cash, which is what it is, that's the way I think of it.
Yeah,
USDC is cash on chain. So if more and more companies start to do that, well, that's just more adoption. So right now, there's over 1,000 banks, financial institutions, and distributors that are part of the official USDC network. So it seems to me like this is just starting to ramp up a little bit with, 18.3 trillion in transactions processed in 2025 using USDC. That is a 250% increase in quarterly on-chain volume. So like reported so far this year in early 2026. So it seems to me like USDC's adoption is accelerating because it's compliant. So that's a big deal, man. I think we're going to see more and more of this. And eventually, you're not going to be able to distinguish between like the old school traditional financial rails and the new school like DeFi rails. It's
I
going to
think that
be
they're going
that,
to build it out to be seamless.
yeah,
Most people, like you're saying, most people, is for onboarding sake, is they're going to interact, with the apps that they're familiar with, your banking app that you log into on your phone, and it's going to all look the same. The user interface will all
like,
look the same,
yeah,
but the mullet that you're always talking about,
right, the
business in
mullet,
front, party in the
yeah.
back.
Yeah, that's exactly what it is, man. They call it the financial mullet.
Yeah.
So yeah, well, we'll see.
So let's go through a couple of X things before we get into the lesson for today. I texted Taylor to see if he was going to make it today. I haven't heard back yet. He must be in a meeting. But so Aave DAO has approved the ARFC to deploy Aave V4 on Ethereum. Next up is an AIP vote, then launch. Do you want to decipher this for us?
Oh man. So let's go through this. ARFC, AIP vote. So I'm assuming that this is governance related. It must be.
Well, I,
Um,
I I know this was the big rift that was that what was causing the big rift between the governance on Aave and was it Aave Labs or something like that?
right, right. So ARFC, what does that stand for? Um, so this is the Aave will win proposal. Oh, that's right. So that was why the Chan initiative wanted to
Yep,
leave.
yep.
Okay, yeah. So it looks like that temperature check they called it, the Aave will win ARFC vote. It looks like it passed on March 1st, getting 52.5% of the votes. And now it's moved into the Aave request for final comment stage. That's what ARFC
ARFC. Okay.
stands for. Got it. Yeah. So this is where they're going to, just make sure that the financial specifics are being battle tested before a final binding on chain vote. And here's the structural trade off it says. So the funding request is that Aave Labs, that's the core development team, is requesting a massive budget of $42.5 million in stables and 75,000 Aave tokens worth roughly $51 million. So that's what their budget request is. And the revenue flip. So in exchange, Aave Labs will redirect 100% of revenue from all Aave branded products, including the new mobile app, the Aave card, and Aave Pro, directly to the DAO treasury. Wow, that sucks for token holders. What the hell's the point of holding the Aave token? Like what's the point? Like you're going to vote on the proposals that you can't win because the development team holds all the tokens. No wonder
Hmm.
the Chan initiative said, "Screw this, we're out." Um,
Yeah.
and then the V4 mandate, it says the vote also serves as a formal ratification of Aave V4 as the protocol's long-term technical foundation, moving away from the V3 architecture that currently holds 97% of the protocol's deposits. So hold on a second, because there was a big problem, a big rift here amongst a lot of the engineering team who I think
Mhm.
quit over this.
Yeah.
So the engineering team at Aave, they were not happy with Aave V4, saying that it's not as safe, not battle tested like V3
Yeah.
is, and 97% of the protocol's deposits are on V3. So if this vote gets ratified and V4 rolls out to all of those deposits and
Mhm.
something breaks, what's going to happen to the largest DeFi money market?
I,
Uh,
I s- I see a lot of liquidity potentially moving over to other projects like Morpho.
It definitely could, man. Morpho or Euler or that's those are basically the two big ones. Or maybe it just moves to a different chain. So Aave really needs to do a good job with this V4. But yeah, man. So there's this guy, Mark Zeller, and he was of the Aave Chan initiative, ACI. So have you seen, all of those incentives on Aave for providing liquidity, or not liquidity, but providing assets? Basically the same thing as liquidity. So he's saying that granting 75,000 Aave tokens to the team gives them much too much voting power, and that would lead to governance capture. That's what it looks like has already happened. And so, yeah, and
Yeah,
so he left.
basically the DAO doesn't exist. It's an illusion. It looks
Right.
like that they're able to vote for and pass whatever it is they want because they hold the majority of tokens. They the governance. They can swing it however they want.
Yeah. So, I mean, it says here, this is that one of those yield loopholes at the bottom here. So, because the Clarity Act, which is currently in negotiation in the Senate, bans passive yield on stablecoins,
Mhm.
the ARFC that we were just talking about is being rewritten to ensure that Aave's safety module and the Go stablecoin that you can mint when you deposit
Yeah,
assets on Aave,
GHO. Yeah.
yeah, are classified as activity-based rewards. So, yeah, I mean, if you deposit a stablecoin into a vault on Aave, that is an activity. So, hopefully that type of yield doesn't get banned by the
Mhm.
Clarity Act. Like, imagine if the Clarity Act passes and it bans earning yield on stables in a DeFi money market because that is not considered an activity based reward. Like, that would be devastating to the American crypto industry because it would force anyone who's a builder in the United States out of the United
Yeah.
States. Like, we can't have that. And I just don't know how much these politicians actually understand about this stuff. It really comes down to, like, whoever's advising them, right? Because you got some like 70 and 80-year-old people in the Congress, in the Senate. Like, they
Yeah.
don't understand DeFi. They
No.
probably barely know how to use Zoom, you know?
Yeah.
So, like,
Well, they have
yeah,
assistants to do it all for them,
right,
and they have lobbyists that are telling them how to vote.
So, yeah, this has been a contentious thing, and I just hope that Aave V4 turns out to be as safe as Aave V3, because, man, if there were to be some problem with Aave during a bear market in the midterm year, dude, that would be no bueno for crypto.
Yeah. So this is a post. I'm always keeping up on Canton Network. It's one of my top holdings. Just full disclosure. But this ecosystem just keeps growing. I mean, as far as exchanges, DeFi, tokenized assets, custody and wallets, security, data and analysis. I mean, this is all just some of the different companies that are running nodes and validators, and that are part of this ecosystem, and it just keeps growing. And I mean, you see names like the actual Nasdaq. You see Temple Finance. You see what's some other big names on here? The DTCC. That's the freaking. What does that stand for again? Drawing a blank.
Deposit tranny clearing system.
Yeah, yeah. So basically, a part of the Nasdaq, and they're the ones that are basically tokenizing stocks. They're a part of that stock tokenization aspect. So this is a massive part of the traditional finance system being onboarded and upgraded using blockchain technology. So anyway,
Yeah, I mean, I think Canton's a really cool protocol, really cool project. It's one of those walled gardens that you've got to,
yeah,
KYC AML to be able to get into, but really, really interesting protocol. Kind of honestly, like the fact that it's a closed walled garden, and it serves banking institutions for the most part kind of reminds me of what I think Ripple Labs is trying to build. I think Ripple is trying to build like a CBDC version of Canton. That's kind of what it
yeah.
looks like to me. Yeah.
I think that Canton is accomplishing what Ripple was trying to do, and I think Ripple, the company, personally has seen the writing on the wall, and why they've shifted away from that narrative of the cross border remittances and things like that, and they're more geared towards launching a bank. Because if you look at all the acquisitions, if in Australia and all around the globe, they're basically buying up companies that have the regulatory licensing already in place to become a bank. I mean, that's really where their sole focus is, and they've moved away. And you can hate me for it, but I'm going to keep pointing it out. They've moved away from the utility, of XRP. So XRP was supposed to be what moved the value and things like that. For the most part, now that's RLUSD, which we've pointed out multiple times, the majority of which is on ETH mainnet and doesn't even use XRP for gas. So,
It's
I
kind
mean,
of
I
funny.
really think that Canton is accomplishing what Ripple was trying to do, and that the XRP ledger had many limitations, whereas Canton Network for the past decade has just been quietly, instead of hyping a token, they didn't have a token up until recently. They've been quietly building and talking with banks and talking with institutions and talking with legislators and saying, what does this need to look like for it to have the max utility? What is your pain points? So that they could build it out to address those pain points. And it really looks like, I mean, yeah, I mean, is it more traditional? Is it go against the cyberpunk version of what crypto is supposed to be? Absolutely. But you can't ignore that TradFi doesn't care about that. Governments don't care about that. They care about regulation. They care about KYC. They care about privacy layers. They care about those things that keep their power structure in place. And if you don't have a stake in that, I don't know what to tell you. You get, sometimes you got to put your personal feelings aside if you want to profit.
Yeah.
To an extent, of course, but
Yep. No, I agree with you, Mike.
so this one, David, I definitely want your input on. Since the year 2000, every major fiat currency has lost significant purchasing power. The Chinese yuan has lost 96%, US dollar almost 80%, British pound 76%, the euro 74%, the Japanese yen 51%. This is what we're always talking about here on this channel, and many other channels talk about it, the devaluation of fiat currency. If whatever you're invested in hasn't, since the year 2000, if you're in China and whatever you're invested in hasn't gotten you in the past 26 years at least 100% return on investment, you've lost money. 80% of the US dollar, if you haven't earned that in the past 26 years, you've lost money. And a lot of this has just been since COVID. So, David, what are your thoughts on this?
Oh, dude, it's just our money is broken and Bitcoin fixes this. Bitcoin fixes this, man. So if we just talk about the cumulative decay of all of these major currencies, the dollar, the euro, the pound, the yen, maybe we just leave the yuan out because, it's a communist dictatorship over there in China. But, the US dollar over the last 25 years. Can you guess, Mike, the cumulative inflation? Now, I know that you've got a piece of content up on the screen there, but can you guess it? It's the cumulative inflation over the last 25 years. So, 25 years might seem like a long time, right? It's not that long. Like it's long, but it's not that long. Like your dollars should not be inflating away to the tune of 82% over 25 years
No.
because like that doesn't make any sense. The euro, the the yen, the pound, all of these currencies are inflating away. And so, it's just unbelievable how broken our money is. And it's not even those currencies, those are the best ones. If we take a look around the world, there
Yeah.
are so many other examples of fiat currencies that have, done much worse.
Well,
You know,
think of these currencies as Bitcoin, and think of all those kind of smaller countries' currency as altcoins. If they've dropped this much, imagine how much those other ones have dropped. Is pretty
oh,
much what
dude.
David said.
Yeah, so, but the problem with these fiat currencies is the backing part. They're not backed by anything. And
Except
so
debt.
that means, yeah, so I mean, that means that the money supply, the
Yeah.
supply can just inflate, and so when the
Oh yeah.
supply
You need more
inflates,
money, just print it.
right.
It's
And
worse than some memes, to be honest.
yeah, I mean, if you want to think about it in terms of a hard asset, well, if you think about it in terms of gold, right? In 2001, gold was $270 an ounce. Today, what is it as of right now? $4,400 an ounce. So, fiat is not a store of value. It is a medium of exchange. It's not a store of value. And so that means that it must be converted into hard assets as quickly as possible so that you can
Mhm.
avoid that inflation tax. And that's tough, man. Most people don't understand that.
I mean, I kind of took a lesson from you. Pretty much the only fiat that I keep in my bank account is what I need to pay my bills. Everything else is either in Bitcoin or other assets like Ethereum or something like that. Just because I have more faith in those than I do the U.S. dollar, to be
Me
honest.
too. Me too. Yeah, man, because we know that the next crisis, whenever that comes, is going to result in money printing. That's the tool that they've got. The
That's the
tool
only
is
lever they have.
that's it, man. More. That's the tool. It's
Yeah,
like
MOAR, more.
MOAR. What's the problem? Okay, here's some more. That's
Yeah.
it.
No, I mean,
Uh,
look at history. I mean, recent history. But look at everything they've done. COVID printed money. It's any time that there's an issue or a problem, their solution is print more money.
yeah, man. I mean, since 2008, the Fed has really started to control global markets. And if you take a look at the performance of equities since 2008, it's straight up. Like it's not even like it makes the S&P look like a meme coin, you know? So yeah, all that is telling you is that the value of the denominator. So, if the SPX is the numerator at the top of the equation, the denominator at the bottom is the dollar. and the dollar, man, is just losing its value. And so that makes it look like the S&P is just pushing straight up when
Mm.
really what's happening is the
The
thing
dollar's
that
way
you
down.
yeah, your unit of account, the thing that you denominated in is just going way down. So that's a shame, man. It doesn't have to be that way either. But as long as we've got politicians who are willing to spend $1 trillion more, or $2 trillion more, or $3 trillion more each year than is brought in revenue, well, then you've got to fund those deficits somehow. And the Fed is stuck monetizing the deficit spending, which means you've got to see M2 expand. And that's why
Mhm.
M2 is expanding, and that's why the value of our dollars are going down. So,
Yep. All right. Last thing before we jump into our lesson for today. Just in, Michael Saylor's strategy announces a new $42 billion plan to buy more Bitcoin. This guy just does not stop.
I love
I
him,
mean,
dude. It is just great.
that is just insane to me. Another 42 billion. It's This guy is either fucking like the dumbest guy on the planet or the smartest guy on the planet. One of the two. There's no in between.
Well, I think that
This is
he
going to epically
understands.
fail, or this is going to make him the richest person on the planet.
I think it's going to work, man. I mean, he understands that Bitcoin is basically property. It's uncensorable property.
Mm.
And, you could say that Ethereum is similar to that, but not really. Like
No.
Bitcoin is better. Um, so it's called the 2121 plan. It's evolved into the $42 billion plan. So yeah, man, this is great. So he wants to raise $21 billion in equity by selling new MSTR shares at the market. Now, there's a problem with his plan. And let me share with you, Mike, what the problem is with his plan. I'm going to
Yeah.
just share my screen for a second here. So the problem with his plan is that his stock is not exactly looking too hot. That's part of the problem. Now, he can probably still sell shares because there's so much trading volume. And that's why, the guy over at Bitmine, Tom Lee, has been able to continue to sell shares because he's got so much volume on BMNR. And the same thing is true with MSTR. A ton of trading volume means he can continue to sell shares at the market. So that's number one. But take a look at this stock though. This doesn't exactly look too hot. Look at where MSTR got rejected. See that? That's the 200-day moving average. We got a bounce off of this 103 level and then got rejected so far at that 200-day moving average. So he'll probably be able to continue selling shares. He's just going to have to be very, very careful how many he sells because you don't want to, dilute current shareholders. So that's the first leg. He's going to sell $21 billion in equity. The second leg is $21 billion in fixed income raised through convertible debt and what he calls innovative preferred stock offerings. So yeah, this is a lot, man. And he holds 762,000 Bitcoin right now. His cost basis is sitting at 75K, just a little bit above 75K.
Mm.
So he's underwater on his Bitcoin position and he wants to buy more. So great, man. Let's see if he's able to do it. In March, he picked up, another 23,000 BTC, and year to date in 2026, he's purchased 90,000 BTC.
Mm.
So as long as that MSTR stock trades at a premium to its net asset value, he can issue shares, buy Bitcoin, and increase the amount of Bitcoin per share for everyone. But
Mm.
that net asset value, that NAV premium needs to remain. If the shares start to trade at a discount to the net asset value of the underlying Bitcoin, then he won't be able to sell them at the market to raise cash to buy more Bitcoin. So
Mm.
that's this is definitely not without risk. And there are some junk bond newsletters that are warning that this is a leveraged death spiral. Because if Bitcoin stays below the company's 75K average for too long, and if the premium on the stock disappears, then this flywheel stops. And that would make it impossible to service that massive debt load without selling Bitcoin. And that's something that Saylor has vowed he would never do. So now he's got plenty of cash on hand, and that's a good thing, because if this bear market continues until the beginning of October, well then he's
Can
going to
lower his
need
cost base.
yeah, he's going to need that cash on hand. But what if the bear market continues for longer than the cycle says? Well, then Saylor would come under pressure. But hey, the cycle repeats, man. I don't know why it does, but it does. So he
Yeah.
should have enough cash on hand to get through this bear, buy a ton more Bitcoin, and just ride it out. That's what it seems like he's going to do.
All right. Well, before we transfer over to the lesson for today, I do want to throw this out there. If you could, if you find what we talk about here in the news, that we dig up in the mornings, valuable in any way, if you find us entertaining, or you like laughing at us because you think we don't know what we're talking about, whatever. If you could, please, like, share, share the stream, like us, follow us. It's really all we ask. We offer a lot of stuff here, no cost to you. This show being one of it. Our Discord doesn't cost you anything. DeFi University costs nothing. We offer so much value here at no cost to you, and all we ask is a like, a follow, and a share. So if you could, please, do us that small courtesy. So with that, David, what do you got for us today as far as education? I might dip out here in a few minutes to go get help Don get set up for his show. But what do you got for us?
Yeah, so I want to start things off by taking a look at this piece of content about USR. So
Yeah,
Resolve is you know, I hope continues to be a DeFi protocol, but Resolve got hacky hacked. So what I want to do here is I want to dive into a little bit of information about Resolve and the hack of this DeFi product. I want to just start my screen share over real quick to make sure that I've got audio
the sound.
running. Yeah, I just want to make sure that the audio is going to work here. I think that it will. Let's take a look. Let's learn a little bit here about what happened to Resolve's USR. So let's rock and roll with this.
When we think about crypto hacks, we usually picture some super complex code exploit. But this is different. This is a straight up digital heist. We're talking a $25 million score pulled off in minutes, all because someone stole a single all-powerful master key. Okay, let's get into it.
So, picture this. It's 2:20 a.m. The Resolve USR stablecoin is sitting pretty at exactly $1, just like it's supposed to. Fast forward just 20 minutes, and its value has absolutely cratered to 2.5 cents. That's a 97% collapse. What on earth happened in those 20 minutes?
Well, this is what happened. An attacker figured out a way to mint 80 million brand new USR tokens, totally unbacked, basically created out of thin air. They just flooded the entire market with this counterfeit supply and boom, an instant catastrophic crash.
And after all the chaos, when the dust finally settled, the thief was gone. They left behind a trail of worthless tokens and walked away with a cool $25 million in clean crypto. The big question is, how in the world did they pull it off?
Every great heist, right? It starts with finding a weak spot, a secret back door. And in Resolve's super high-tech system, the fatal flaw wasn't in the vault itself. Nah, it was in the person holding the key.
Okay, to really get this, think of the Resolve protocol as a bank vault. The vault itself, which is the on-chain smart contract, is super secure. But here's the catch. It's also blind. It can't see the outside world. So it has to rely completely on instructions from a keymaster who operates outside the vault. Now, in the Resolve system, this keymaster had a fancy name, the service_role. It was basically a digital signature stored off-chain on Amazon Web Services, and it had one incredibly important job: to check a user's deposit
and then sign an order telling the vault exactly how many new tokens to create. It had absolute total power.
So the process was supposed to be simple and secure. A user deposits, let's say, $100,000. The off-chain service role verifies it, then it signs an order to mint 100,000 new USR tokens, one for one. Simple, right? But what if you could steal the keymaster's signature?
And this, right here, was the fatal flaw. Resolve assumed its off-chain security was totally impenetrable, but the on-chain vault had this critical weakness. It was programmed to blindly trust any order that was signed by the service_role. No questions asked. It never stopped to think, hey, does this order even make sense? And that blind trust, that was the backdoor the attacker was about to kick wide open.
So, with the vulnerability found, all that was left was to execute the plan. Let's get to the timeline and see exactly how this heist unfolded, minute by minute.
I mean, the speed of this attack is just stunning. After getting into AWS and stealing that master key, the attacker makes their move just 21 minutes later. They deposit $100,000, but then they use the stolen key to sign an order for 50 million tokens. And the blind vault? It just obeyed. By 2:38, the price had already collapsed. And then, believe it or not, they did it again, printing another 30 million. It actually took Resolve over 3 hours to finally hit the pause button.
Now, creating the counterfeit money was just step one. The getaway is a whole other thing. And this attacker, they were a pro. They immediately started laundering the money through the complicated world of decentralized finance, swapping the now worthless USR for real, valuable assets, draining liquidity pools dry and funneling everything into Ether, a final asset that couldn't be frozen or reversed.
And here it is, the final take. After the digital dust settled, the attacker's wallet was holding over 11,000 ETH, worth about $24 million, plus another million or so in other tokens. A clean getaway, with a grand total of over 25 million bucks.
But you know, the story doesn't end there. In this incredibly interconnected world of DeFi, one protocol's failure can spread like a virus. This wasn't just a heist, it was the beginning of an epidemic that infected the whole ecosystem.
And this brings up a really important question. The attacker stole from Resolve, right? So how on earth did other, totally separate platforms start bleeding millions of dollars?
Well, the answer comes down to something called a stale oracle. Just think about it this way. While the market knew USR was now basically worthless, other platforms had these price feeds that were just too slow to update. Their systems still thought USR was worth a full dollar. This created a massive, golden opportunity for traders to buy up USR for pennies and then go use it as dollar value collateral on these other platforms to borrow millions in real valuable assets.
Now, Resolve did have a line of defense. It was an insurance fund designed to cover losses like this. But it was only capitalized at about $38 million. When it got hit with $80 million worth of counterfeit tokens, it was instantly overwhelmed, totally wiped out.
And that had some devastating real-world consequences. One firm, Stream Finance, was the largest investor in that insurance fund. When the fund went to zero, they lost an estimated $17 million. The contagion was spreading, and it was spreading fast.
So what happens now? Let's take a look at the aftermath, the official response from the team, and maybe the single most important lesson we can learn from this whole mess.
Resolve's team did eventually get things under control. They suspended the system, they managed to burn some of the attackers' unspent tokens, and, this is really important, they confirmed that the original $141 million in collateral was never actually stolen, it was just diluted by all the counterfeit supply. Now they're working on a plan to try and repay the original legitimate token holders.
The analysis after the fact led to one absolutely crucial takeaway, and it's summed up perfectly right here. In a world where off-chain systems can be broken into in just minutes, the on-chain smart contract has to be the final, unchangeable line of defense.
And this is probably the most shocking part of the entire story. A simple sanity check. One single line of code in the smart contract that says, basically, hey, the amount of new tokens being created can't be more than 5% greater than the collateral someone put in. This one little check would have made the entire $25 million heist completely impossible.
Ultimately, it all comes down to this. The on-chain vault didn't need to place all its faith in some off-chain security system. It just needed to do the math. The code itself should have been the final judge. Verify, then trust. And that really leaves us with a fundamental question as we keep building our digital future. When it comes to securing billions of dollars, Should our final trust lie with the human systems that can fail, or should it be in the cold, hard, unchangeable logic of the code itself? It's a $25 million question that we all have to figure out how to answer.
A lot of protocols used USR and wrap staked USR products, and a lot of those protocols are probably hurting right now. If we take a look at the anatomy of the collapse, let's just see what this looked like here. Oh wow! So Shaul from Canton is going to be on this Thursday. Oh man, that's going to be great. Really looking forward to that, Mike. So just saw that in the chat. That's pretty cool. So if we take a look at the anatomy of this
Yeah, just heard from Dagnum PI as well for next Thursday.
awesome, man. I think that's great. So if we take a look at this USR post-mortem, right? So this was just yesterday. Resolve protocol failed after an attacker compromised the off-chain administrative credentials to mint 80 million unbacked USR tokens. And so this is, really, it wasn't necessarily the trusting of the off-chain signer. It was that there was no on-chain sanity check and no rate limit. So Resolve kind of fucked up here, not gonna lie. So number one, their AWS infrastructure was breached. So that's not good. Obviously, that was probably some type of human error there that allowed that to get breached in the first place. And then the attacker, just minted 80 million USR tokens based on a $200,000 deposit. So they were able to break the system when they had the signing credentials, because the system didn't look to see, does 80 million in USR make sense for a 200,000 USDC deposit? It doesn't. But if you had the signing credentials, it didn't matter. The smart contract would mint anyway. So US Resolve, they really messed up, man. They really messed up. They should have baked this in. They should have prevented this in the first place. And so what happened? Well, after the inflationary minting, the token USR depegs basically goes to zero. I'm kind of curious. If I hop on over here to Dex Screener, just real quick, I'm kind of curious just to see if it's trading at zero or not. USR, USDC. Wow, it looks like it's bounced a little bit. So if we just take a look, unbelievable. Look at that, man. Here, I'm going to go ahead and share this tab real quick. So take a look at what happened to USR. This is just crazy. So what was the low? The low, so this is market cap. I want it in USDC. What was the, so this is just market cap. But yeah, it went from a market cap of 176 million to 6 million. So what is that? Let's go ahead and figure that out real quick. 6 divided by 176. So it was down 97%. 97% at its trough. That is amazing. We could even measure that real quick. So the price range from par to, down 97%. Ouch. And then look at the people who were buying it. There were definitely people who were buying this back up. Now, for what reason? Why would you buy this back up? Because this protocol should die now. That's usually what happens when stuff does something like this. So if I go to resolve.xyz, let's just take a look. Resolve team is investigating a security incident involving unauthorized minting of USR. The collateral pool remains fully intact and no underlying assets have been lost. Okay, so what exactly does Resolve do? And look at their numbers went to zero. That's horrible, man. But the collateral pool, so these guys are running a basis trade. And so what that means is they've got, oh, look, app temporarily unavailable. Dude, I would be so pissed. I would be so pissed. They just like shut down their app too. But what Resolve did up until the moment that they got hacked for everything was, let me just bring up USR over here on TradingView so that I can draw on this. Market cap, USR, I think that'll work. Or you know what? I might just want to bring up the USR USD. There we go. Let's take a look at this. So this is the USR token right here. And let's just talk through what these guys did until they let their crappy key management on AWS allow all of their customers' deposits. Let's be honest, these are customer funds that were stolen. Um, so they're saying that the collateral pool is totally fine. Well, okay, what does that mean? Because they're going to have to make these token holders whole. And that means they basically got to unwind the entire protocol, which means the protocol goes to zero, just so that they can repay customers. So they were running a basis trade, these guys. Okay, and so what does that mean? Well, it means that let's say that you are a customer and you deposit USDC with Resolve, right? What does Resolve do with that USDC? This is just at a very high level. Well, maybe they go and they buy ETH, okay? So they're with your USDC, they go and they buy ETH, positive ETH. But they can't just be long ETH. They've got to hedge that ETH. And so at the same time that they buy ETH, they also sell ETH. So they get short ETH using probably futures. Okay. And so you've got a funding rate that you might be able to earn on those futures contracts that you are short. And then on the ETH that you are long, you're probably holding an LRT, an ETH LRT, and that earns some yield also. So maybe on the LRT, you're able to do 3% APY. And if you're lucky on the futures contract, you might be able to earn some positive funding. If not, you're going to have to hedge that funding rate using like Boros or something like that, an interest rate swap protocol. So all in all, between the long ETH LRTs and potentially some positive funding on the short perp position, you might be able to do like 5 or 7%, maybe, if you're really, really good at managing it. So why would people deposit? Well, because they can take their USDC and get USR and wrap staked USR and earn 5 to 7%. And then maybe you can lever that up on like Morpho or Euler or something like that. Now, this is the basis trade that Resolve was running. But you see, the problem with this is now that the USR token is going to zero, well, they've still got that collateral pool. Remember on the website, it said, hey, don't worry, the collateral pool is safe. That didn't get stolen. It was just all of the other money that we minted based on that got stolen. So if we bring it back over here to Resolve, they're saying, hey, we're investigating a security incident. Yeah, your entire money got stolen because you guys didn't do a good job with your AWS keys. And so they're saying that the collateral pool remains fully intact and no underlying assets have been lost. Well, that's a lie. Underlying assets have been lost. It's just, is their collateral pool worth enough to repay all of their customers? That's the question that you've got to ask right now. And so, basically what was in the USR, the Resolve collateral pool? Well, I think it was basically a bunch of ETH. I think that's basically it. So as long as the collateral pool has enough ETH to repay customers, then maybe customers will get out of this, maybe, probably not though. Let's just take a look. So over here, I'm on DeFi Llama taking a look here at the Resolve. I think, so this is USR circulating. And so this is obviously not updated because, this has basically gone to zero. So this was over here, the market cap. But what I want to find out is what's in that collateral pool. That's what I want to find out. So yeah, you can see this is just TVL. And I always take these data with a grain of salt here, but I need to know about that collateral pool. That's what I'm interested in finding out here. And, look, this protocol was actually making money too. It's amazing. They were actually making money and now it's all gone. That's a shame. Basically, I want to find out what was in the USR collateral pool. So let me find out. Let me see if I can find out. Tell me about the assets in the USR Resolve collateral pool. I think that they were just holding a bunch of ETH. I think that's what it must have been. So let's see. Yeah, so ETH LSTs, staked ETH and wrap staked ETH. A little bit of Bitcoin here. And I'm just trying to figure out exactly how much. Okay, so the collateral pool has $141 million. Got it. Okay. So that means that they definitely have enough ETH in the collateral pool to make customers whole. That's what it seems like. Although, think about it this way though. If we bring it back on over here to TradingView and we take a look at Resolve USR, this is the price. But if we take a look instead at the market cap and we take a look at USR, just the market cap of USR. So it was, $400 million according to these data from TradingView. So you know what? I want to see if we can find a better market cap. I think this is probably better, simply because this is from Uniswap. So this might just be the pool, whatever was in the pool, that USR USDC pool on Uniswap. I'm sure that there was like a really big one there. But if the pool had 176 million in it, then more than likely it was, roughly 50% USDC and roughly 50% USR. So that means just on ETH mainnet on Uniswap, there was likely, something like $85 million or $87 million of USR just in this one liquidity pool. So this hack, taking USR to basically, not quite zero, but it looks like it could go to zero. This hack should damn near wipe out that entire collateral pool. So that collateral pool should, or at least it looks like, it will likely be sold for USDC in order to make customers whole. Anyone who is holding USR, to make them whole, that collateral pool's got to get sold. So I don't know if we're going to see that or not, but yeah, what a shame. What a shame. That is really, really a horrible thing to have happen there. Yeah. So big hack, man. And again,
Yeah.
it was social. We're always talking about that. It was a social exploit. It was two things really. It was, number one, a social exploit to get that AWS key, and then number two, they didn't have a sanity check in their code to prevent. You can't mint 80 million tokens against 200,000 USDC in collateral. So that was their fundamental error in the code. So yeah, man, yeah, it's just a real shame, dude. But the attacker, pretty brilliant to be able to pull something off like this, but definitely has ruined a lot of lives, because I'm sure that there were a lot of people who had, a significant portion of their life savings in this thing. And, this is what happens in crypto, man. These things can go to zero in 20 minutes. And that's basically what happened here.
It's why it's so important to diversify, and not put too many eggs in one basket, especially in, these, speculative markets, because crypto's still very young. And a lot of these protocols are, they're run, you need to understand who they're being run by. And not to say that this isn't a competent team, but looking at this exploit, I mean, it kind of seems like this is something that, a team of developers and people that are managing, this amount of liquidity, should have been able to spot. I mean, it sounds like a pretty basic, a basic thing.
Oh man. So I'm taking a look over here at Pendle, at the Pendle Resolve market. And this used to be a pretty big market. And now, of course, there's nothing left. But it's just interesting because I've never seen, something like this blow up, overnight, or at least not recently. Not recently. There hasn't been a big exploit like this recently, but we're always talking about what are the risks, and one of the risks here, if you're in one of these PTs or YTs or LPs on Pendle, is that the underlying asset goes to zero. And so if we just take a look at like this PT, oh, it's not gonna allow me to view it. I really wanted to see some data on this. Wow, so that's interesting. See, this is what I was looking for. So this is super interesting. Wow. So was that what day was that? Okay, so it's they closed out the market, but what you should see is you should see the yield on the PTs go straight up as people exit those PTs and sell them. So yield and price are inverse over here in this bond market, essentially what it is on Pendle. But yeah, what a shame, man. What a shame to see that happen. And I've never used. You see, there's a new ask thing over here. Post exploit, what is the current recovery status of USR supply? Wow, it looks like DeFi Llama has an AI now. Have you used this yet, Mike?
I haven't used it. I know that they launched it a couple of weeks ago.
Wow, it looks pretty good so far. And I mean, I think that there should be enough in that collateral pool to repay customers. Like there should be enough just to repay customers, but that's it though, barely. So I think what it's doing here is going through to find the actual recovery in numbers. So this is looking pretty good so far. This Llama AI. This is my first time using Llama AI. It looks like it wants me to upgrade probably at some point, and but it must be trained on all of these data. So it's not like you're asking Gemini, or some other AI model, which could just hallucinate if it doesn't
Well,
have current data.
I would hope DeFi Llama, being a data aggregator, would their AI would have pretty good integration with the data streams that they pull.
Hey, did you see what Frequency Atomic said in the chat? Inside job makes sense. That will come out at some point. Man, I mean, that's
Could
where it all
be.
started, right? Because the keys, the AWS keys.
Yeah,
Yeah. Yeah. I
I,
mean,
I wouldn't be surprised. I mean, I don't know of any information that would lead me to believe that, but at the same time, just knowing where to look for those keys, or having being able to find that exploit, be able to piece together that exploit, it would have made it a lot easier to have somebody on the inside that that knew how everything was set up.
well, check this out though. So this is my first time using DeFi Llama's AI. So the USR exploit, post exploit status. So USR is not in recovery. No, it's not going to recover. It's depegged at 21 cents. The protocol remains paused. So yeah, I mean this could be like I wonder how you could get short this token. Like how could you express a bearish bias in this USR token now? That would be an interesting play. You would need to be able to borrow it, but I wonder if you could borrow it from any of these markets. I'm sure that there's still supply. There's still some supply. Um, so we know how the attacker, depegged the token, the RLP token. The RLP. This is the junior tranche. That was the safety reserve. That went to zero. So the peak supply on January 30th, dude, look at that. That's amazing. So it went from nearly a $500 million protocol, and it looks like it's going to go to zero now. And then there we go. Pre-exploit market cap, $100 million. exploit day market cap, $38 million. Current supply, 37 million. Current market cap, 7 million, down nearly 80%. But here's the thing. The protocol is fully paused. So basically, if you wanted to speculate on the protocol actually going to zero, then you would just want to put up USDC and borrow USR and then swap that USR for USDC to initiate a short position. I wonder if there are any liquidity pools left on Uniswap with USR tokens still in them. So I'm just checking this out real quick because maybe you wouldn't necessarily want to just swap into the token on Uniswap. Really, what you would want to do is go to like Euler or Morpho and see if you could find a money market over here on like Euler that contains USR. So you know what? I might actually go to the market. I wonder if they still have it, the Resolve market. So Resolve, there it is. Okay, awesome. So there's still some supply. And it says high usage warning. Oh, look at that. So look at your supply APY to supply USDC in this market. It's at 100% utilization. Wow. Okay, so that's for USDC. Now, what if I deposit USDC and borrow USR? Because that's what I want to do. So if I deposit USDC over here, then I'm going to earn this 54%, and I want to borrow USR. That's really what I want to do. I want to be able to borrow this USR, so can be borrowed. So it looks like max LTV. So is there any liquidity here that can be borrowed? That's basically what I want to do, because this thing's going to zero. And if I can borrow it for 20 cents, then all I do is earn that 50% yield. Oh, but yeah, see, that's the max ROE. I don't want to multiply this thing. How much am I going to pay just to borrow it? What's my borrow? Okay,
hey, David,
so,
I'm going to jump over with Don. He just popped on. So
gotcha.
Yeah, we got about 3 minutes.
3 minutes. Okay. So yeah, this borrow APY. So if I'm going to supply USDC earning 50% and borrow
All right. So
USR.
I didn't do anything to set up so that you can learn how to do it. So if you want to go to media assets.
Yeah. So, basically, if I'm taking a look here on Euler, then, I would just need to make sure that if I put up USDC in this USR USDC market and I'm earning 50% on that USDC collateral, if I borrow USR against it, I would have to borrow well below the max LTV so that my net APY is not negative. And then really it's just a play on, will USR continue to move lower? And that would be just a short position here. Basically, what you're saying is you think that USR goes to zero, and you just want to be able to not pay some negative carry to keep that short position open. So that's what I have for you today, Mike. I think if you're ready to hop back on and wrap things up, then I guess we can do that. I just want to make sure that DeFi Don gets the live redirect. So I think what we're going to do here, you guys, thank you for joining us live. And we're going to move on over to DeFi High School. And hey, Ryan, I see you in the chat, man. I'm going to send you another follow-up about the music thing. I think that if you're down to give it a shot, man, it would be pretty cool. So, but Mike, I think you're frozen. So I'm just going to go ahead and end the stream. Thanks, you guys. See DeFi Don in a couple minutes here for DeFi High School.